let's start with inflation. How are clients pivoting their portfolios in relation to inflation, especially because you have said so many are hoarding cash?
Yep. So let's just talk, what do we think about inflation right now? In the US, we do think that inflation's peaking right about now. And we expect that it's probably going to go down to a little less than 4% by the end of the year. And that's because you're getting supply chains that we expect to moderate. You are going to get rate increases, which were really well televised yesterday, and you'll get the runoff of the Fed's balance sheet. The other thing that's also sometimes overlooked is really the fiscal stimulus that we had last year. That's not going to be the same this year. So that combination of things is why we think that inflation probably ends up around 3.9% by the end of the year and even lower next year. What do you do to protect against high inflationary environments? Asset classes that tend to perform well: equities, alternative assets, real estate. And so within equities, we're recommending that our clients have exposure to names that have pricing power, that have high margins, that have strong profitability. You think about what's really gone on in the marketplace over the last year, and you've seen, or really the last 6 months, you've seen the names where previously were really valued highly on future growth potential being really the stars. Now what clients are very focused on is profitability, so the underlying profitability. What sectors do we think that comes in? Healthcare, energy, and disruptive tech that's profitable. If you look on the credit side, what we would recommend is focusing in on private credit opportunities where you have floating rate exposure. So that floating rate will reset as you get increase in interest rates. And then lastly, on the alternative side, there's a number of things, but real estate, you'll get rent resets as inflation goes up.